Welcome to another S&P 500 analysis. Today is August 15, 2023. Looking at this heat map on the screen, it is a bloodbath. Blood on the street for sure today, and only a few pharmaceutical and also Nvidia and Oracle and a couple of the home builders along with Home Depot was up, and that was about it. We are looking at a bloodbath, and I'm going to show you some chart that we could be headed lower. Now let's take a look at the index ETF here. Notice all of them are negative and they all are down at least 1% or more. And looking at the Russell 2000 ETF IWM, it's down over 1.3%. And here on this chart, the intraday chart with some of the internals, you see the S&P 500 lost over 50 points and 1.18%. And you can see that it's been negative all day long since the open gapping down. And the VIX is actually came up to 16.34. We're still under this 2030 zone, and the market participants still in a zone that is a little bit complacent. But notice the put-call ratio is now inside of this 0.7 and 1 zone and sitting at near 0.85. So definitely the market participants are in a hedge mode. And in addition to that, we're noticing this it was almost 5-1 in favor of the down volume today. As a matter of fact, at the lowest point throughout the day, in the morning, there was over, it's just a little bit over 8-1 in favor of the down volume. And the advanced decline, we have over 2,000 more declining issue than advancing issue. So that is pretty much 80% of the traded stock is traded down today, with 48 more new 52-week low than 52-week high. And here we got the S&P 500 on a closing basis here on this top of this chart here, the screen. And the bottom chart is the ratio between S&P 500 and the gold. So you can see that the ratio is sitting about 2.2. We're not too concerned about the level of the ratio itself, but more importantly is the divergence. You notice that the S&P 500 got a high here, while the ratio is actually made a lower high. So in other words, there are more money shifting to the safe assets such as gold than on a risk asset in the stock market. And that's the way that we want to look at it. So as this ratio come down, we expect the S&P 500 or the risk asset will come down along with it as people moving their money into a more safer asset such as gold. So that's basically what this chart is meant to use, to help us gauge the risk level in the market. Now, here's a chart that I want you to pay attention to. Notice this is the NASDAQ 100 on a closing basis. We see that it came up and closed at a high here, while the cumulative AD line failed to even come close to this high. So you see there's a negative divergence here. Remember on the weekend video, I was talking about this low here on the cumulative AD line. And we're looking for it to come down and see where I'll take out this low. And notice today, it actually went below that. And notice that the NASDAQ 100 on a closing basis is still way up here near its high. So in order for this thing to get resolved, at least we want to see this NASDAQ 100 to come down and get below this 13,500 area. So there's a lot of room for this thing to drop, and an indication of that it is most likely will come down to this level, at least to this 13,500 in the near term to resolve this negative divergence here. Now I'm going to jump over and talk about the E-mini S&P 500 future. And for those that are trading or interested in looking at the ETF for the S&P 500, the SPY, I suggest you go and check out my Substack page. I have a daily trade plan that I put out to identify various levels to keep an eye on. So go and check that out. The link is in the description below. So we're looking at the ES here with this multi-day balance, this 5-day balance here, and we basically booked this balance and came down today. Right now it's finished down here at the lower distribution here, and it's pretty much of a balanced day for the profile. And also today it went and resolved these single prints here. So for the coming days, I'll be watching for the possibility of it continue to move down and come down and check this 44.3650, this naked point of control here. So we'll be looking for that as a one possible downside target. And then the next one here is this poor low, almost near the 43.99 and a quarter. So it's about 4,400 level. This poor low from June 28th, and then the June 26th naked point of control at 43.83 and a half. So if we are seeing a continuation downside move, beware of these levels here. Now tomorrow, if we get upside, we could come up and check this naked point of control from August 14, last Friday, or I mean yesterday, and also the single print from yesterday as well. So those are some of the levels to keep an eye on if we do see this market rebound tomorrow. But most likely, I'm looking for to continue on the downside and possibly take out these low. Remember, tomorrow we're going to get the FOMC minute. Now, looking at this ES chart here on the intraday basis, this is a 1 hour chart. And what I want to share with you is some of the level to keep an eye on if you're an intraday trader or a short-term swing trader. These are the level to keep an eye on. Tomorrow, we'll be watching this level here, the 44.50 and a half level. That will be the key level to watch. So basically, it's a pivot level. If it comes up, then look for this virgin point of control at 44.56 and 3/4 and see what it get above that. And then we'll target 44.71 and then pushes up to the composite point of control at 44.85 and a quarter. So those are the upside level to keep an eye on. Now for the downside, if it get below the 44.50 and a half, then look for this virgin point of control at 44.37 and 3/4. Then pushes down to the lower range of the weekly expected move at 44.21 and a quarter, and this level here at this ledge at 44.1775. So those are the level to keep an eye on for intraday basis for tomorrow as a trading plan. So watch this 44.50 and a half. That would be a pivot level that we want to pay attention to. So good luck. And if you like this video, be sure to smash the thumbs up and give it a like, and also help promote this video on YouTube. And also, if you are new to this channel, click the subscribe to support this channel. Thank you for watching and stay safe.